The U.S. House Committee on Financial Services has released a statement unveiling a draft bill proposing a new market structure for digital assets in the country. The proposed legislation aims to deliver regulatory clarity while maintaining U.S. leadership in financial innovation, as well as a decentralization test requiring disclosure of any holder with more than 10% ownership while ensuring centralized control is absent. The bill also defines stablecoins without labeling them as securities and provides an optional early registration path, along with joint rulemaking by the U.S. Securities and Exchange Commission and Commodity Futures Trading Commission. The newly released U.S. Crypto Market Structure Bill has received positive feedback from industry experts. Matthew Siegel, head of digital assets research at VanEck, praised its major upgrade over FIT21 and highlighted that it removes income and wealth thresholds for retail investors and eliminates accredited investor and suitability requirements. Justin Slaughter from Paradigm called the draft an incremental, albeit meaningful rewrite of FIT21, which modifies oversight procedures and alters the path to decentralization recognition. Further optimism came during an interview on NBC's Meet the Press, when President Donald Trump declared his full support for cryptocurrency, emphasizing its growing popularity and resilience amidst market fluctuations. President Trump's support for crypto includes appointing a known advocate as SEC chair and establishing a digital asset stockpile. The Trump administration is considering giving the Commodity Futures Trading Commission, CFTC, control of cryptocurrency regulation in order to provide more regulatory clarity for the industry. Currently, both the CFTC and Securities and Exchange Commission, SEC, are involved in crypto regulation. However, the SEC has been seen as enforcing its rules too harshly by the industry. The CFTC would need additional resources to ensure investor protection in the crypto market. While the crypto industry prefers the SEC, the administration's proposed move could provide lighter regulatory approaches and more clarity for the industry. The Trump administration may create a designated position for crypto assets. The potential move follows news of Gary Gensler, former SEC chair, resigning after Trump's victory. This development could impact regulation of crypto assets in the U.S. and possibly provide more clarity for the industry to grow. For more on crypto and stocks, follow Ascencore. Thanks for watching and have a nice day.